Key indicators of a good investment in Dubai in 2024. What's going on, guys? My name is Joe Butler, and I am here connecting high net worth investors all over the world, sourcing the best property deals in the most exclusive locations. Now, if you want any more information on how we can work together, all what you need to do is go below, follow the links, and we can chat and we can get straight into it. So I'm going to start this video off with a little story. So recently I had a client come to me, said, Joe, I've got a budget of about £1 million. What can we do with it? So I had a few suggestions, and some of the suggestions he wasn't ready for, such as renovating properties. So I was looking and exploring what we can do potentially in the off-plan market. Now, at this time, the investor specifically said, Joe, I want to make sure I get some sort of return in the next 12 to 18 months. Now, if we look at the off-plan market, a lot of the stuff that's launching today is not ready for, say, 2 or 3 years. And some investors are happy to wait that long, but this investor specifically wanted something ready, or something that he can make money off in this time frame. So the only real option we had was either buying something from a developer which is ready in 12 months, which is likely at the back end of their launch, which generally means you're going to be paying the higher price points, or we look at the off-plan resale market. We did just that. Now, he actually said to me, Joe, I've looked at a few different projects in downtown, I've looked in the marina, and some of the projects were nice, but the price per square foot was so expensive. And for the projects that we're offering this kind of price level, there was not even anything comparable to actually say whether it was a good investment or not. Apart from actually, it probably isn't that good, okay? So what did I do? Well, I started to take my initiative and I started to look at what communities are underdeveloped or undervalued right now. And there was one community that struck my mind, and that was Mina Rashid by Emaar. Now, if you don't know where this project is, it's located right near Maritime City, Dubai Islands, and generally over there. Now, Port Rashid is an upcoming community, but Emaar took it over, and when they did do that, okay, well, you just need to put those 2 words in a sentence, Emaar and waterfront. Now, because of this client came to me, and we were able to source a property in the secondary market, all right, 40% cheaper than what Emaar were offering. So to put that into perspective, a 2-bedroom unit by Emaar, they were asking 3,100 dirhams per square foot for the ocean facing. I found a unit that's ready in the next 6 months, okay, in the resale market from a seller, and we got it for 2,400 dirhams. That's 700 dirhams cheaper than what the current market value is that Emaar are offering. Now, that doesn't mean that all developers are overcharging. It just depends on the demand in that area. You know, I see some Emaar projects now in the Valley or Oasis where the price points are heavily undervalued, and the appreciation we're going to see in the future is going to be huge. So that brings me on to step number 1 when you're looking for an undervalued project in Dubai, and it's checking the price per square foot. Now, it's a pretty simple task to do. You just need to divide the price point that they're asking by the square footage of the unit. And what you do a little comparative analysis, and you actually see whether that unit is overvalued or undervalued. And you do that by checking actual data and statistics within that area. There are many websites online where you can go and find that information, and you can see in the district of, say, Palm Jumeirah or downtown, if I buy this for this price, okay, what's the highest transaction in this area for a similar 2-bed? Maybe it's a branded residences. Okay, have similar branded 2-bedroom residences sold for similar prices? Or am I paying 20 or 30% over the market value? It's a pretty straightforward thing to do. Now, of course, if you don't want to do that, this is how our business model has been created. We have data-backed investment strategies from start to finish. We're analyzing every step of the way. We don't just think because something's been stamped with a brand, we think it's going to make somebody money. No, we can't do that. We have to use comparables in the market. Otherwise, we're just speculating too much. And honestly, the investments I've seen where people are speculating often don't go too good. Now, let's take branded residences, for example. You've got some of the most iconic branded residences in central locations and on the Palm Jumeirah. Now, these are recognized globally, and it also adds a lot of value, okay? Because I see Dubai's super prime luxury real estate heavily undervalued, but also heavily undersupplied. That's why brands like Omnia are taking over the market, and they're delivering some of the most exceptional products that the market's actually seen. Right now, we're sat in the Opus, and I'm actually in a 2-bedroom apartment, and it's absolutely beautiful. And they've got some incredible projects throughout Dubai, you know, on the Palm Jumeirah and Marassi Bay. But then also you've got other residences such as the Baccarat, you know, the Four Seasons. All of these are taking over the luxury market. Because if you go online now and you look for a luxury residence in the downtown district, you'd be surprised how little there are. What about the Six Senses in Marina? Fantastic project. Sold a lot of the units very fast. And the reason for that, the marina is very dated now. You know, if you only have to look at some of the projects in there, that there's not actually that many good residences, good buildings that people want to live in, apart from, Marina Gate or Damac Heights, for example, nice buildings, clean buildings with good facilities. So that's why these branded residences are good in these strategic locations, but again, as long as you get the price point right. So then let's look at villa communities. If you're going to be buying into a new off-plan villa community, again, do the same thing, work out the price per square foot, compare it against current communities, for example, Oasis by Emaar. Prices around 1,700 to 2,000 dirhams per square foot, heavily undervalued. If we look at some of the most premium villas now in Dubai Hills, they're reaching prices of 3,500, 4,000 dirhams, okay? So again, about finding the right opportunities, getting in at the right price point. But also, if you are buying into a villa community, for example, and you see that prices are more expensive, then you need to understand what is that community having to offer that actually justifies why the prices are more expensive. Are they delivering something a bit more unique? For example, huge plot sizes, only standalone villas, lagoons, beachfront within the communities. All of these things need to be considered. And then if we flip it on its side, add in value to properties by flipping properties. So you've already seen a lot of that on my channel, where we take older villas, undervalued villas in premium locations such as Emirates Hills, Palm, Meadows, Jumeirah Golf Estates. We rip them back to shell and core, we renovate them, add value and resell them. We're also seeing a lot of progression there in terms of price points, although it's very cash heavy for an investor. That might not suit everybody. So if you are looking for a villa community to invest in, then we have some of the best opportunities on the market. Either that's from the developer and there's cancellation units, or that might be off-plan resale, or if you are an investor looking to flip a property, then we also have opportunities to renovate and resell. Demand, how in demand is that area and that location? We are seeing a large supply of units come into the Dubai market, and we are seeing the general migration flow of where people are sort of choosing to live these days. Where it used to be, say, more in the central of the town, we're starting to see people move outside of the town as well towards, communities where they're more affordable for rent and stuff like that. So if you are looking for a cash flow property, then it might be worth considering actually buying outside of the city. Why is that? You might think that doesn't make sense. Well, actually, there's a lot more people who are sort of looking for budget apartments than there are for high-end apartments. I say branded residences, these trophy assets, they're amazing for, say, flipping and, keeping hold of gradual, insane appreciation over time. But from a cash flow point of view, it might not always make sense. If you're buying something 2-bedroom in downtown for 10 million dirhams, is somebody really gonna, rent it for $1 million per year? Maybe, maybe not. But there's a lot bigger chance of you buying sort of in areas like Creek Harbour or Shoba Heartland, or even Arjan, or even JVC, these areas where they're known for good cash flow. So it all comes down to your budget and your investment expectations. I have clients that say, Joe, I just want to get in the market, I want to exit the market, I want to keep flipping my money. And like I said, for that reason, we look at off-plan resale or off-plan closer to handover or property flipping. And then I have clients that say, no, I'm just interested in cash flow. Okay, cool. Where can we buy a property in an area, like an established community, where we can still get prices at a good price point, okay? Where we can still get property at a good price point, okay? Now, once we find those, then we do, again, analysis. We look at the current rental yield in the area. Are there, rents transacting at the price that, we'd need to make 8%, 7%, And if we can see a consistent, rental indicator that that's possible, then it's good, all right? And then the last one I want to just mention is developer reputation, okay? There are a lot of new developers in the market today. We're seeing private developers from all over the world, and I've sold a lot of private developer, products. But generally, the private developers, they're always offering a little bit more than your, say, Emaar or Damac or Shoba. For example, we've seen apartments in JVC now offering Miele appliances. These are like high-end kitchen appliances being offered in an area which you'd never really consider that of a luxury development, So what does that do? It means that people are now getting more competitive. These smaller developers are offering more, but still offering very good prices. Yes, they might not make as much money, but they're making more of an impact in the market, So these are all the little indicators that you should be taking note of. And of course, me and my team are here to help. Always what you need to do is reach out below, and we can dive into this and we can create a data market analysis and see what investment suits you from start to finish. I look forward to seeing you there.